Another social media company has disappointed its investors, but is the latest plunge in the Twitter share price actually a great buying opportunity? Hello, I'm David Jones. I've been a technical analyst in financial markets for 25 years, and this is our channel dedicated to US stocks. I thought we'd take a look at Twitter. The share price got absolutely clobbered on its latest earnings update. Really disappointed investors and hard hit. So in a second, what we'll do, we'll jump on. We'll see what the reaction was to the market to Twitter's latest results. I'll come back, talk about them in a bit more depth. We'll look at the big levels to watch out for in the next few months. Then we'll go back and see just where the opportunity might be after the share price has fallen off a cliff. Don't forget, if you're watching this and you haven't subscribed, if you can subscribe, support the channel, and we'll continue to push out content like this. But let's catch up and see what happened to Twitter's share price after its latest earnings. So let's have a quick look at what has happened to the Twitter stock price this year. So I've got the year going back really to December of 2018, and you can see up until the third week of October, everything was doing well. We're seeing that the share price making this recovery from about $27 as high as $46 by early September. But then we had the latest set of earnings, and it really was a case of mind the gap. You know, we had disappointment from Twitter in terms of earnings, and you can see the price gapped from about $39, opened at 32, and has carried on pushing lower. We're going to come back and look at this in a lot more depth in a couple of minutes time, and just talk about the levels first. But you know, because I'm wondering if it is an opportunity here, even though it's been knocked back to what, a 7-month low. Is there an opportunity? So I'll talk a bit more about Twitter. We'll come back and look at things in a lot more detail. We'll go back and look at things in a bit more detail. But at the end of October, Twitter said it had been plagued by product issues all the way through the previous quarter. It did warn these could actually hang over until 2020. So the net result in terms of profits, the market was expecting Twitter to make about 20 cents a share. It came in, the actual number was 17 cents, so a bit disappointing there. Revenues as well missed expectations. Expectations were for around about 874 million in revenue by Twitter. It came in around 824 million, so another miss there. And of course, advertising is key to Twitter making money. The expectations were that it would have had something like 756 million in advertising revenue in the quarter, but because of these problems, it came in at just over $700 million. So maybe not too surprising why we saw such a negative reaction by the market. But maybe this is overdone. Let's talk about the big levels to watch, then we'll get back into it and see where the opportunity might be. So we have some big historical levels left over just the last couple of months because the price has fallen so far. But I think the immediate hurdle is $32.40 a share. That's the high we saw after that gap lower. We'll have a look at this in a bit more detail. On the downside, of course, because of the fall is where it gets a bit more interesting. I'm going to talk about the 2880 level in a second. That could be an important one for, I think, aggressive short-term traders. But the really big one for Twitter is $26. And this is why I think maybe this plunge is an opportunity. Let's jump back onto it and find out why. So just as a quick reminder, this is the long-term history of Twitter since it came to the market. It came to the market around about what started trading anyway at $44 a share, pushed as high as 72, and then really because investors struggled to see how it was ever going to make any money, we saw it sell off for a couple of years, trading down sort of below 16, down towards $14 in May 2016. But the story recently has been a lot more positive over the last couple of years until these latest earnings. So let's zoom in on what's been going on since 2018. We did have that great recovery that was progressing for much of this year until those earnings came out. But if we look at Twitter over the last couple of years, you can see that the story is really one of a broad sideways range, and the market is seeing value down around about 26, and then when we're pushing up to the mid 40s, the sellers are coming back in and the stock's turning lower, and then of course we have the shock of the earnings. So I'm wondering, okay, it's been hit really hard, and if you'd bought it at 44 in September, you're not too happy when it's sitting here trading below 30 now. But I'm wondering, if we see a bit more weakness from here, does this end up being another opportunity? We have seen what a strong floor $26 has been for the Twitter stock price. So whilst I wouldn't want to be a buyer just yet, I think it's a really interesting one to watch over the next few weeks. I suppose if you really wanted to buy it now, if you thought the sell-off after the earnings was overdone, there is an aggressive trade. Let's just jump in. So here's the collapse after the earnings. So I suppose the aggressive trade at the time of recording is trading at what, $29.50. We saw it push very briefly below 29 at the end of October. You know, be a buyer now with a stop loss the other side of 29 below those lows, assuming your assumption would be the market's fallen, has overreacted. I think that's maybe a little bit too aggressive. And I think there's a lot to be said for being patient here in Twitter and just seeing if we do see yet again $26 to $28 holding the price up. Not surprisingly, it's really oversold on the RSI. It's a 10-day RSI. Because it has, you know, effectively collapsed over the last couple of weeks, that's been dragged to an extreme reading. I wouldn't read too much into that, but I think it's an interesting one, and we'll come back to it before the end of the year. So I think overall, the trend for the last couple of years, pretty sideways, but we have seen 26 be a floor. Let's have a quick look at, you know, what happens if 26 breaks. You know, what does the technical picture suggest? When we see big levels break, you know, it's a suggestion that clearly sentiment has shifted, and I think if we did see it push below $26, $25 a share, there'll be a lot of unhappy shareholders, you know, just maybe too happy to offload the stock, and we end up seeing more selling. So I think, yeah, the risk is we'll pull back to the old range from 2017. You know, we'll start trading around about $20 a share. But for now, 26 is holding. That's the big level to watch, I think, over the next couple of months. We'll come back to it and see if it's managed to stage another recovery off this old historic level. So I don't think it'd be trading back up at $40 anytime soon, but it is a really interesting one to watch ahead of this big level. We'll wrap things up there. So from me, David Jones, good luck with your trading and investing.